Hello everyone, I hope you all are doing well. Welcome to you all to the second lectures of a banking and insurance. In today's lecture, we will totally focus on the meaning and the definitions of insurance given by different scholars, propose or needs of insurance, similarly the principle of insurance. So let's start with the meaning or definitions of insurance without delay. We all have heard about the insurance company. So, what is this insurance company exactly? Who are the persons involved in the insurance company? No need to use a lot of a mind. Simply, we can say that insurance means a financial protection from any hazards. It is a form of risk management used to fight against the risks of a contingent loss. In other words, we can say that insurance is a business of insuring persons or property against risks. It is based on the principle of cooperations and it pulls the risks and spare over a number of portions. Premium is collected from a portions and the insurance fund is created. Exactly from that premium, compensation is given to those who suffer from contingent loss. In the case of insurance business, the entity that provides insurance services is known as insurer or the primary insurance company. In the similar way, a person who buy the insurance is known as insurer or the policy holder. The amount which is charged by the insurer for the coverage is known as premium. Now, let us know about the definitions of insurance given by different scholars and authors. According to Goss and Agrawal, he says that insurance is a cooperative form of distributing certain risks over a group of people who are exposed to it. Similarly, according to M.N. Misras, insurance is a cooperative device to spare the loss caused by a particular risk over a number of persons who are exposed to it who agree to insure themselves against the risks. So, simply we can say that insurance is a contract between insurer and insurer in which insurer promises to compensate the insuree by paying a fixed sum of money on the happening of a pre-decided accidental loss in the exchange of a premium paid periodically or in lump sum by the insurer. So insurance is a business in which two parties are involved like insurer and insuree. One pays premium and another promise to compensate against the loss on the happening of a certain event. Yeah, that's it. I hope you all understand the meaning of insurance. Now let us know about the importance, purpose or the needs of insurance. Why we need insurance? As we all know that insurance provides safeguard against uncertainties and risks. It has now become the most popular risk handling method. It is important for both individuals as well as for organizations or institutions. The first importance of insurance is financial protections. Yes, of course, insurance provides financial security to an individual and or institutions. If a person insures his life, the insurance company assures to compensate the dependent if the insurer die before the expiry or to the insured person himself on the expiry of the insurance policy. Similarly, insurance provides financial protections to the business assets and properties against the risks of a theft, fire, accident or any other calamities. Another importance of insurance is that it encourages saving. The insurer should pay the amount of a premium regularly and periodically, compulsorily. It developed the saving habit among them. The deposit insurance premium cannot be withdrawn like a bank deposits. Life insurance is the best media of a saving and investment. It is a good means to make provisions for retirement age. Similarly, insurance increases self-respect. There is a direct connection between self-respect and independency of a person in the society. Insurance support to a person to be independent. It provides economic support to an individual or a businessman, which helps to increase the self-respect of a people within the society. Similarly, insurance improves the living standard of a people within the society. Insurance has now become the most important instruments to provide financial protections against unexpected risks or loss. The insured amount helps to increase the individual living standard even during the old age. Similarly, another importance of insurance is mental peace. Insurance provides mental peace to the insurer. It helps to remove tension, fear, associated with risks and uncertainty. An individual can devote himself to achieve efficiency in economic activity due to the peaceful state of mind. It helps to increase the efficiency and competency of a people. Loan facility is another importance of insurance. Yes, of course, insurance policy can be used as a basis for obtaining loan from the bank and financial institution. A person can obtain loan from such institution as is the collateral of insurance policy. Employers' welfare. Insurance can act as an effective tool to promote employer welfare through life insurance policy, which helps to cover the risks of their sickness and accident. That's why insurance can be used as an effective tool or technique of motivations and improving efficiency of the employers. Similarly, insurance also helps to reduce inflation in an economy. Premium collected by the insurance company reduce the supply of money. On the other hand, collected fund can be invested in the productive purpose. Such investment helps in increasing productions and decreasing the impact of inflation in an economy. Similarly, insurance also helps to create employment opportunity within the country. Insurance company needs different type of the personnel with distinct skill, experience and academic qualification. They provide employment opportunity to the peoples of the country. Therefore, hundreds and thousands of the peoples are regularly employed in the insurance company. The world is dynamic every day. The environment is being changing. Nothing is secure in today's dynamic world, whether we talk about the business or itself or human life. Thus, insurance plays a vital role in today's dynamic world. There are also the other important needs or purpose of insurance. So, principle of insurance. What is the principle of insurance? The first principle of insurance is the principle of utmost good faith. Yes, of course. According to this principle, both parties of insurance contract must be of the same mind. Both parties means one insurance company and the another person who is going to insure his life or business. They must behave or act in utmost good faith. It means that they should disclose all the material fact or information fully truthfully while entering into the contract. There should not be any misrepresentation, non-disclosure or fraud concerning the material fact. If one of the party does not follow the principle of utmost good faith, another party can make agreement void and can even file the case in the court of law. Principle of insurable interest. The insurance contract will be valid only when it poses the insurable interest in the subject matter of insurance. Interest means a relationship between insurer and the subject matter of insurance. The monetary gain from the existence of a subject matter and the loss from its destruction is the insurable interest of the insurer. In the absence of insurable interest, nobody can get the property insured. Principle of indemnity is another important principle of insurance. Indemnity means a security or compensation against the loss or the damage of a subject matter. Insurance is a contract of indemnity. Yes, of course, it should have the principle of indemnity except life insurance. According to this principle, the insurer makes compensations to the insuree against the loss in the financial term. This principle totally clarified that the insurance is only for the compensations of a loss but not for any financial benefit. It means compensations given to the insurer can never be more than the actual loss of the property. Similarly, another important principle of insurance is that principle of contributions. Contribution is the process of sharing the actual loss among the co-insurer. This principle exists when the insurer can insure the same property within more than one insurance company. This principle states that if a person takes insurance policy from more than one insurance company for a single property, then the insurer will be paid the actual loss by this insurance company in the ratio of a value of a policy issued by them. Principle of subrogation is another important principle of insurance. Subrogation is the right of a subject matter of insurance get to be transferred from insurer to the insurance company after indemnity. Simply, it implements transfer of ownership from insurer to the insuree or from the policyholder to the insurance company after indemnifying the loss to the policyholder. Similarly, another important principle of insurance is that principle of loss mitigations. So what is this principle of loss mitigations? Mitigations of loss means to make the loss less severe. According to this principle, it is the duty of the insurer to make every effort and to take all the possible steps to minimize the loss in the event of an accident. He must try to act as a rational uninsured person. If he doesn't do so, the insurance company can avoid the payment. Similarly, another important principle of insurance is principle of cause proximate. So what is this principle of cause proximate? According to this principle, if the loss is caused by two or more than two reasons, then it becomes necessary to identify the nearest cause of the loss. The nearest cause or the immediate cause is known as proximate cause. The insurance company is not liable to compensate the loss caused by remote cause. Also, the insurance company is not liable to pay for the damage caused by risks not covered under the insurance policy. I just hope you all have understand the meaning, concept, important and the principle of insurance. Yeah, that's it. Thank you.